Okay, I think I'm ready, and hope you guys are as well. And we shall just get into it. So, before anything else, I would like to say a big thank you for attending my webinar earlier today. The first session. Today is the second. Now is the second session. Thank you for coming again for the second time. Very good afternoon, evening to some. Today is the live introduction. This session here is the live introduction to geometric patterns analysis. Sort of like a training or a course, you can call it. But we want to also look onto the chart of what was shared earlier in the first session, okay? Because the first session was more practical. This one here is just an introduction, a brief introduction to geometric trading, a little bit of repetition from the first session, but not too much, so that you can get a better, fresh information. Good evening to you as well, Marina. Greetings from Dubai. Hope the weather is nice. Here in Limassol, it's not too bad as well in terms of temperature. So I'm reporting live to you today from Limassol in Cyprus. Okay, so let's get to it, to today's session here. So I want to talk to you a lot about, a bit about geometric patterns analysis and a lot more about how it works, okay, and how it has been working for most traders. But before anything else, just a bit of a risk warning. Forex and CFDs are leveraged products and involve a high level of risk and can result in the loss of all your invested capital, okay? Therefore, Forex and CFDs may not be suitable for all investors. You should not risk more than you are prepared to lose. So before deciding to trade, please ensure you understand the risk involved and take into account your level of experience. Seek independent advice if necessary. Okay, so that's it. A very short, brief risk warning for you guys, and let's get into it. We'll talk a little bit about how I categorize patterns. Okay, I know I've covered this in session one, but I'll make this one brief, sweet and short. So we are talking a lot about patterns. A lot of people are trading patterns, but there are ways in trading them differently. But also, quite a number of people understand patterns differently as well. So in my opinion, patterns have got different categories. So many people, most traders, are very familiar or maybe are trading using patterns like double top, channels, flags. You know, you've got many types of patterns. The weak point, I'll talk about the benefits and also the disadvantages of these kind of patterns. Now, you've got different categories of pattern. You've got just chart patterns, you've got harmonic patterns, you've got geometric patterns, and all other kind of patterns. So whatever patterns they are, they're usually categorized. They all come under price patterns. Okay, so here, as you can see on my slide here, you could see that you've got too many patterns. But the downside of trading just a chart pattern is that it becomes very subjective. What that means is that you need to rely and trust your eyes a lot about what pattern you see on your chart, and sometimes that can be very risky. Okay, and I've tried that many years ago, trading only with the patterns, and I find that, you know, not that it doesn't work all the time. Yes, it definitely don't work every time, 100% of the time. But if I were to share with you a pattern and I say, oh, there's a double top here, you may be in Dubai, in Malaysia, in other parts of the world, and you may say, no, it maybe is a triple top. Maybe it's not really a double top because of this, because of that. You see, so sometimes it lacks the confirmation. This is a big problem. The confirmation is not done technically, mathematically, or using any method that are more accurate than just visually looking at it. You know, so when you look at a pattern, a double top, and then you see that, okay, double top could be like that, and because you know, or the head and shoulders, the head is there, the two shoulders are there, but how are we to confirm that these two ends are actually the shoulders and that is actually the head, and things like that. So that is the number one problem, trading only with chart patterns. And if you don't have confirmation and you don't have a strategy on the fundamental side or on the mathematical side, like money management and things like that, then you don't mix them up all together. It becomes over technical, and it becomes overly technical analysis, and that is a big risk actually. Okay, because you are weighted on one end and you're not using a balanced sort of approach. Okay, so a balanced approach usually gives you a better measure of probability. Okay, so you've got a second one, is called the harmonic patterns. Now, harmonic patterns, you got name like Steve Carney, Pasavento, all these people are actual traders. Okay, I've made contact with them in the past. I've gone through some of their courses as well, online and offline, and they are really real traders who are, who are very, very successful as well. And the thing about that is, of course, they've got a higher probability. These harmonic patterns have got a higher probability. Of course, they've got a bit more confirmations using Fibonacci ratio. So, like myself, I use Fibonacci ratio a lot for my geometric patterns. So this is taking away from the harmonic patterns itself. We use ratios, we use Fibonacci retracement ratio. So all the numbers that you see on my slide, they are based on harmonic patterns. Sorry, they're based on Fibonacci ratios, and there are rules as well with that. But again, the downside of it is that somebody needs to have someone who trades, or people who trades with this pattern solely have to have a very good memory. You have to memorize and know exactly which pattern is which with which calculations or ratios, and that can actually be quite tiring, using a lot of your memory, and sometimes it can also be confusing. But if you are trading only like this, again, you will be heavily weighted on one side and you'll be only technical. So only technical, what will happen is that you will increase your risk and lower your probability at the end, because our world nowadays is driven by geopolitics, by economics, economy, politics, and everything else, right? Also, you have to not discount any tragedy, tragedy and any mishaps or anything that of natural causes like earthquake and everything else, or even terrorist attack or anything like that has been termed in the news, or anything comes out of the media, or strikes or anything like that. So if you are on one side, sometime any sort of shocks in the market are difficult to be measured directly and accurately just using this kind of technique. So hence the reason I don't feel personally that it would be a good idea to just adopt one type of technique and follow that. It needs to be measured from the risk aspect with different types of techniques combined, so technical and fundamental. Okay, so hence the reason with all these things that we see, I came up with the idea of geometric patterns, okay, geometric patterns, and I basically just want to make it very simple, and I want to start with an ABCD pattern. It's one of the pattern that is quite familiar with some, so I just want to follow ABCD pattern, make it simple, direct. So out of all the patterns you see, I want to start with the core foundation of the ABCD pattern. So this is how it looks. We'll go into that again thoroughly, but now I just want to tell you how did this geometric patterns thing came about. So it came about 6 or 7 years ago when I studied and learned a little bit about WD Gunn. So you guys may have heard about the Gunn technique and everything. He is termed as a financial astrologer and everything else, but more than that, he is a trader. And he seemed to have some records in trading for the U.S. government, trading with big corporations, and he's been named one of the most successful trader of all times for the entire United States of America as well. So a quote in the Journal of Commerce has said that his calculations are based on the science of letters, numbers, astrology, all this kind of thing. He combines it. It has said that Gunn used planes to inspect crops. However, this is highly unlikely and things like that. So there's a lot of things you can read about W.D. Gunn, but I'm not saying that I'm actually just following whatever he's taught. What I like is I take that 0.05% of things that he has taught, especially with geometric patterns, which I like and I have experimented a lot and has actually worked in my trading years for the past 5 to 6 years. So it has been very successful for myself as well as traders around the world, my students especially, and basically what it is that I do is I take things from W.D. Gunn, from Pasavento, from Steve Carney, different people who trades with shapes and Fibonacci ratios and patterns and all that, and I take out the ABCD side of it and I simplified it to ABCD, and from ABCD I look into using more geometric shapes. So in other words, in summary, I like trading with shapes, and the 3 shapes that I find works in the market are the triangles, a square, and a circle. So even with W.D. Gunn, he believes that as well, and he has actually applied geometric shapes in his trading, and this is his emblem. He called it the forecasting tool using these three shapes. But in the modern times, after he has passed away and everything else, you've got modern traders taking over from him, and with that, they actually use shapes, something like what you see on my slide. They use the shapes, and the shapes actually created or still creates, even for myself, very powerful trend lines automatically and things like that. But I had the what do you call that, the opportunity and fortunate enough to meet some people who are trading in very big portfolios. Of course, they can afford software of hundreds of thousands. That's why they have created softwares to generate these geometric patterns. And some of the banks internally, just to share with you internally amongst us as well, that we've got traders who are literally trading with shapes for the banks with the portfolio. They are trading all these junior traders using these kind of software because they have no time to waste, obviously, because they're trading in the bank and they're managing like really huge portfolio of millions, and they are trading like this. So this is one of the program that I used inside the banks by certain traders, and also one of my mentors basically. And as you can see, you've got a diamond shape like that, for example, and you've got an A and you've got B, C, D. So what we are doing is we are manually drawing these ones because we are retail traders, okay, and we want to be closer to the market, and this has to be something personal for us, okay. So we want to draw things manually, and in my personal opinion, also through my personal research, I find that if your right hemisphere and your left hemisphere of your brain, they work a lot more, then you would actually be balancing the hemispheres of the brain, which will cause you to become less emotional and more logical, more logical, following the logic of the market. So you are more balanced in your approach. So that is a very good way, one of the proven ways to enhance your trading techniques, to be more patient, to be more disciplined, is by doing the activities that balance up the approach of your brain, okay, your hemispheres of your brain, the activities, okay. So I would, in my mentorship program through FX Geometry and Blackwell Global Academy, we want to mold you into becoming a strategic trader, whereby we use a trade plan. So the trade plan does involve geometric pattern analysis, but this is only about 10% of the entire model. So we've got quite a number of things that we will teach you, and this will then encourage you to use the right and then the left brain, and the left brain, the right brain. Why? Because this part of geometric patterns, they use the, let's say, the right brain side of it, because it's creative and things like that. Then you've got the numbers side of it, doing calculations, and then you've got a logic side of it with geopolitical analysis and a couple of other things. So when we have a simple pattern like that, it's easily converted into a geometric pattern as such. So here we've got your geometric pattern here when you attach all these lines. I'll show you onto the chart itself, okay, so you get a better idea what exactly I mean. Now, I wouldn't be able to measure the probability and also the risk level without the use of Fibonacci tools. So the Fibonacci tools on the MT4 platform is one of the biggest tool, and it's almost compulsory for me to have the Fibonacci tools. And I use Fibonacci ratios that is categorized under Fibonacci retracements and Fibonacci extensions, okay. Fibonacci retracement, I use it anything that is below the 100 ratio, Fibonacci ratio, below 100, like 61.8%, 50%, and all that. Anything below 100%, I use it to enhance the shape or the pattern, or the geometric pattern, okay. I need it to know where my C point is. So that is for the Fibonacci retracement. For the Fibonacci extension, this is when I use Fibonacci extension to help me predict the D point. So I use Fibonacci tools to do two things. One is to tell me how good the pattern is, how high the probability, how low the risk. And the other thing I use is to know where the D point could potentially reach. Okay, so this is what I use my Fibonacci tools for, and they are absolutely essential for me in trading the geometric patterns. Okay, so let's just look very quickly. We'll go over what we've gone through earlier on today, just before we go onto the chart and discuss what have happened with the USD JPY, especially right after NFP. Okay, so for those of you who are wondering as well. So before that, let's go on to the, it's really simple. We draw the ABCD. When we draw the ABCD pattern, we'll start off with knowing the direction. The number one thing you would need to do before drawing the ABCD pattern is knowing the trend. If you are in an upward trend, you want to only look for the bullish ABCD. If you are in a bearish trend overall, you want to be looking only for bearish pattern. But there's no harm if you want to anti-trade, you want to take that correction move and trade opposite. It's entirely up to the trader himself or herself to do so. Okay, but usually your probability goes up and your risk goes lower if you are trading the shapes or the geometric shapes or patterns with the trend. So bullish market, bullish ABCD, bearish market, bearish ABCD. Okay, so I'll just show you this one here. We always start with a low, with a high, with a low. And this is when you're looking for an ABCD to the upside or a bullish ABCD. So you've got a low, you've got a high, and usually A, B, C, and you want the C to go up a little bit more. So in an A, B, C, D format, we are not trading or forecasting A to B or B to C. We are only trading or forecasting the D point. So it is the C to D leg that we want to be trading in. Okay, so we've got step 2, for example, a rough sketch. Okay, we always can start with a rough sketch. You can do this by drawing, just very simply using the tools on your MT4 and draw and see whether or not you can come up with a potential ABCD. Now here, for example, before I draw a sketch even, I need to be very sure, I wouldn't say very sure, but I have a probability of the trend. So let's say the overall trend is an uptrend. Then I'm looking at, an A down here, B, C, and D. So that's a low, a high, a low, and a high. So we are trading, looking into this area of trading. Okay, it's impossible to really enter here, exit there. No, so we want to be looking at an area in the middle that would actually be high probability, lower risk type trades that we are looking for. Okay, so here we are trading that C to D leg. So your C is down here, your D is forecasted around there. Okay, so I'll just remove that one in a second. Okay, now we're going to step 3, and don't worry if it is a bit fast that I'm going through, because I want to show you the chart straight away on a live market, because I like representing that on a live market so you can actually get the excitement and see the prices moving with the patterns drawn. Okay, so don't worry, we'll repeat all this on the charts. So even if you miss some, simply ask me the questions and I'll be happy to rewind for you. Okay, don't worry. So you've got your first leg drawn, let's say, right? Your A to B, that's labeled, as you can see, the first leg. Okay, the red color line. So that red color line that you can see here is your A to B, and then you've got your B to C down here where the low is, and your C to D. So as you can see, the C to D, the C must have moved a little bit away already, so that it can then give you an indication that point is really C. What if it just move a little bit and then come down? So that's why you want it to move a little bit more. Okay, so it's okay if it moves that much, and how much should it move? That would depend on the centroid area that I will actually cover, so don't worry. So here you go, we go on to the next one. You got your second leg, for example. That's how it looks, your B to C leg right there. Okay, very simple. And then you will see a sort of a complete ABCD looking like this. So you've got the A, B, okay, A here, B there on the high, and then C, second leg. B to C is your second leg. Your third leg, which the one that you'll be trading and predicting, is your C to D leg, which is the third leg, and the D is the area that you want to do that. So in order for us to predict where D could actually go, very simply, it's like being in a drawing class, okay, being in an art class, whereby you first draw your first line here, you double click, you bring it over there. That means the length of A to B is similar to C to D, and that is the first way first option, we've got two options of predicting the D. One is AB equals CD in length. Secondly, we use the Fibonacci. We'll leave the Fibonacci side of it more into it in our upcoming sessions as well, but we'll cover a little bit in a bit. Okay, so but we stick with the simplest form of predicting the D point, potentially is by having AB equals CD. Okay, so then we go a bit lower. All right, so here we've got AB's length equals CD, as you can see, and then at the end of the D, we draw a horizontal line to actually indicate to us where D could potentially reach. And this is just following the first option, where AB equals CD. So then we go on here. Now, once we have converted the ABCD pattern into a geometric pattern, okay, we could then as well use Fibonacci ratio. I think I've put that one. It's probably around here. Okay. So once we've done that, we are able to do the probable D projection using Fibonacci. Now, when you use Fibonacci, I pick out some Fibonacci ratio to use so that I know when the C point reaches at one point, I know where BC could potentially reach and things like that. So here we'll cover a little bit more. Let's just go on there. Now let us now apply what we have learned roughly in theory into practice. Okay, but before that, I just want to show and present to you what we have presented as a trade idea this morning on the first session. The first session, we had a pattern drawn like this. That was actually, I mean, now of course you see like a diamond shape or a kite shape type pattern, but this is actually just an ABCD pattern. Okay, so if I remove that one there, okay, and I remove the one in the middle, okay, we have got a very simple ABCD. So at the time, the prices, if I'm not mistaken, they were trading all around this area here, okay, so this area here, and it hasn't actually reached there, but we predicted AB equals CD and D could potentially reach the PRZ area here. So what we did initially was the AB length went up, could potentially go up to the C to D, and that was the area that we predicted. Okay, I didn't actually quite reach that red line there, but then we did actually tweak the prices based on psychological numbers, because we came up with a zone that prices could reverse from. But then I've mentioned as well this morning that it's probably best to exit before price reaches that zone there. So that zone is very close to 113.50. You know, initially we talked about it, 113.50. Okay, so 50 is a side number, psychological level. So we didn't want to take profit every time. We shouldn't be taking profit exactly on round numbers like 50, 20, 00, or 80. Okay, so usually we want to take about 10 pips below before it reaches the side number. So 113.40 was ideally 113.40. 113.40 was said to be the area that we would take profit, and it did. So it went up there, and then now it's on the way down. So some people would like to trade C to D. You can also trade D to E, okay, when it comes downward. So you've got two legs that you could potentially trade, but the higher probability one is usually the C to D leg. Okay, so let's just go to there. Okay, so let's start from the very basics now. Here we have got the ABCD. That was a very successful trade on the ABCD, and that was also right after NFP that they actually just plunged downwards like that. Okay, so let us just look at more ABCD samples so that we get a clearer picture of what's going on. I'll just erase all that here. Let's just do a little bit of practice so that we get an idea of how this ABCD works. Okay, but before anything else, it's probably best for us to always cluster. The number one rule of the game before the geometric pattern, before everything else, is the capital T, R, E, A, and D, your trend. You need to be very, very clear with trend direction, because if you are on an uptrend, okay, then I'm looking for an up type bullish type ABCD. If it is a downtrend like this, I'm looking for a down type ABCD, but we are trading only or looking to predict the C to D leg, the C to D leg. That's for the downside, that's for the upside. Okay, so here it is very essential for us to be clear on trend direction. Before that, it's the time frame. So let's say, for example, I like trading the 1 hour, 4 hour and daily chart, because this is how I cluster up my time frame. So if at all I choose this, you could choose these three, M5, M15, M30, or M30, M1, H4, sorry, H1, H4, or any combination of three consecutive time frames. Okay, now time frames, in my personal opinion, to choose a time frame should actually be mirroring your equity. If you've got smaller equity, it's probably best to look into smaller time frames. If you've got bigger equity, medium type equity, then medium type, what do you call that, time frame. Now 10,000 and above is considered on the bigger side equity, so you could afford or look into hour 1, hour 4 daily. Daily would be still the maximum that you could do it, and just so that you could look into lowering your risk and not go into too risky a territory. Okay, if it is below 500, you know, it's probably best to look at 1 hour and below. So that would be a bit of a rough guide for you to choose the time frame, not choosing the time frame just by guessing, choosing the time frame by understanding your equity and matching your equity with what time frame would be best to fit you. Okay, your analysis. All right, roughly, this is just a rough guide, and it has been working quite well with some of the traders on all different levels of their capital level. Okay, so capitalization is quite key in deciding the time frame. So let's say if I were to choose 1 hour, 4 hour daily, then what would happen is my 1 hour becomes my short. Yeah, short time frame, and then I've got the medium time frame here, and then the daily will be my long term, small, medium, large. Okay, just so you get a better idea. So short, medium, long term would be my H1, H4, and my D1. Okay, so let's just clear that one here. Okay, so now, for example, we start off with the hour 1, and all we need to do first off is to look at whether it's on a downtrend or an uptrend just by the biggest move that you can see. You zoom out and you look at the angle of the whole fall. You need to keep in mind that it is as though a straight line from the very top to the price now, that straight line. Forget about all these disturbances and all this volatility. We ignore all that. We look into this whole angle. This angle here, let's say if we're looking at the clock or your watch, you've got a 12 o'clock up here. Okay, let's say this is the hand of the clock or the watch. You got your 3 o'clock around here, then you got your 6 o'clock. So this is about 4 o'clock. 5 o'clock is around lower, around this area. So it's at a 4 o'clock angle that this is trading. Now, usually 3 o'clock will be uncertain market. 1 o'clock basically would be quite strong. Sorry, that's 2 o'clock here. Okay, 1 o'clock, the steeper it is, the stronger the trend, and then 12 o'clock, it's a really strong trend. The same goes for the downward momentum or trend. So here, 4 o'clock, it's still on a downward type momentum or bearishness, but not as strong as a 5 o'clock or 6 o'clock. Okay, so here on the 1 hour, on the shorter type time frame, yes, it is picking up in the downward trend, but not very, very strong as yet. So that's why we need to confirm with the other time frame to give us an overall picture of the trend, so we know what kind of geometric pattern we need to actually look for, whether it's a bearish type or the bullish type. Okay, so here we need to then quickly go into the 4 hour chart right there, and we can see now that you have got a trend. And we need to ask ourselves, what angle is it actually trading now? That is the most obvious recent move that you can see. This whole thing is considered a trend. You got a previous trend all the way up here, but what about this trend here? Now here itself, that angle is a little bit steeper than the previous angle, meaning that it's going towards the downside a little bit more. The angle is a little bit more to the downside. So that is showing that the medium term here, it is showing more momentum to the downside. So what about the long term on the daily chart? Okay, so on the daily chart, we have got this. Let us just erase that. Okay, now that downtrend here, that is a very steep, it's a steeper downtrend, which is towards the 5 o'clock, 6 o'clock angle, giving you stronger bearishness, or stronger bearish sentiment or momentum. So that is telling us that on the long term, the story is on the long term, we've got more momentum to the downside. On the medium term, it is picking up. On the 1 hours, not that strong, but it's probably picking up. So it's picking up here, going stronger on the 4 hour, going even stronger on the daily chart to the downside. So something may be marinating, something may be going on. We don't know that yet, but visually we can see that this technique does actually help in understanding that momentum. What if we go and zoom in and look into what's going on? So now, for example, we are looking at down type, bearish type ABCD. Now the bearish type ABCD, why? Because we have seen on the 1 hour, 4 hour and daily, the sentiments is more to the downside. Because it's to the downside, we are looking at bearish type ABCD like this, with your A here, with your B here, with your C here, and your D here. We are trading from C to D. All right, so this is what we are doing right now. Now, what we do next is, let us erase that one there, and let's look at, what do you do first? You need to first look into a downward move like this, a little bit of correction, and a little bit of move already starting to come down. So that is your A, that's your B, that's your C, and we are looking at where this D could go to. Okay, there we go, right? As simple as that. So let's just start. Always look at the corner left of your chart, okay? And you can zoom in as much, but it's probably best not to zoom in too much, or not too much out, or not too much in, okay? So that way you won't miss too much. So here, for example, if I just zoom out a little bit, okay, I look for a downward move. Okay, so we've got one here going on right away now on the 1 hour chart, USD JPY. Okay, so we've got a downward move like that. We've got an upward move. So we've got a correction, right? Now, this is your potential, just potential, not certainty, not a sure thing. Okay, you've got an A to B potentially. You've got a correction here. So that's your C. So there may be a potential D on the way down here. Okay, so what we do next is, we've got this rough idea in our mind how it would look like, right? So then what we do is we start drawing the lines based on your trend line. Your trend line tool here on the Blackwell Global MT4 platform, you could find it right here. That's your trend line right there. So what you do is you drag it from the very top here on the wick itself, on the body itself. It doesn't really matter, but on the wick most probably, and it's probably best to do that. And you pull it from your A all the way down to the B. So you leave it there. You got your first leg, A to B leg, and then you continue doing your B to C leg like that. Okay, so what are we doing next is, we are doing the leg that would help us predict the D point. That is what we are looking for. So then you double click your A to B, simply drag it across like that and pull it downwards here. Now, if at all your trend line, let's say your trend line doesn't look like mine and it's really long or it extends, then what you do is you simply right click on the trend line, go to trend line properties, go to parameters and unclick the ray. Okay, you need to unclick the ray so that it becomes exactly like what you see in mine, in this trend line. You can always right click, you can always right click on the trend line itself, double click first and then right click, You can change the color as well here, the thickness as well, and that's entirely up to you. Okay, so now let's say we go back to this pattern here, this about to complete pattern, hasn't completed yet. A to B right there, correct? So we pull, oops, just a second, let's just polish it up a little bit, and it goes all the way down here. So here we've got your C to D, all right? So now A to B starts from there to there. So now we've got a draft, okay, a draft ABCD pattern right here, okay, and this is where we're predicting the D. The D is right there, okay. So we have got, let's say I'll label it now, okay, label it to A, okay. So we've got your A, and then you've got your B right there, okay, right, and then you've got your C right here, okay, and the D is where we are predicting, so we don't actually know because it hasn't happened yet, so we're not guessing, but we've analyzed the market a little bit more, understood the trend a little bit more, and projecting the D to be potentially or probably at this area here. Why? Because AB equals CD is your first option. Okay, so that is basically an ABCD. It's not yet a geometric pattern as yet. So you've got your ABCD. First way, AB's length equals CD. Okay, so here it is like what I've mentioned, it's not yet a geometric pattern, so we want to convert this normal common ABCD pattern into a geometric pattern. How do we do that? Very simple. You simply pull the A all the way, drag it all across from A, attach it to D point. So A to D point, and that gives you a center area right there. Okay, this center area is really powerful. And I will show you what I mean, and we've got a center area there. Okay, there you go. See the center area, yeah, that where the cross is here. Okay, the crisscross. So this one here, the cross right there. What we do next is we identify that center area where it has crossed as a center point. I call it the centroid area. Okay, now your direction is down, the trend is down, okay, the trend is down, the direction is down, so the ABCD is down. So because the ABCD is a bearish ABCD pointing down to this area, your direction is also down. So because your direction is down, your trading area is under the centroid area, under the centroid area. Okay, so under 113.01. Okay, so 113.01 is just too close to 113.00 site number. Okay, psychological number. Okay, so this is always not a good number to trade exactly. You would need to trade under the 00 at least by 10 pips. If it is under the 00 psychological number, it will be roughly 112.90. Yeah. Yes, correct. Right. So 112, right? So that would be an ideal area for trading area to look into more space to the downside. So that is one price given to you is 11300 because that is the closest site number there, and then you need to trade lower than the site number if you are looking into a bearish opportunity. You want to look into above the psychological number, only above this line, only if it is a bullish pattern. Now it's a bearish type pattern, you're looking to the downside, you want to see more momentum to the downside, and you are targeting the D area. The D area here, 110.65. Before reaching 65.65, the psychological number there is 110.50. Okay, so you've got 110.50, right? 110.50 is your site number right there. So usually that psychological number, it's a very, very big area for you. So anything could happen at the 50 area, close to the 50, like a turnaround of price or anything can happen there. So we want to always, if we were to take profit or look into take profiting, it's probably best for us to exit early before 110.50 area. Okay, so before that it would be 110.60. Okay, so I'll just type that one there. So you've got 1, just to be at the safe side, 0.60 will be your safer area as opposed to the site number. So you have got that area. Your trading area would be from 112 onwards to 1160. Okay, so one could be your entry area, one could be your take profit area. So that's basically how we do it based on the principles of psychological numbers. Okay, so there you go, based on USD JPY on the 1 hour chart, planned using psychological numbers, geometric patterns as well. But before that, knowing a little bit about the trend. Of course, if you guys are interested in knowing the whole trade plan using the price model that we do, combining it with geometric pattern, we can then cover areas of money management as well, where we calculate our risk, lot sizes, position sizes as well, based on your personal equity, as well as knowing a little bit about geopolitical analysis, to know about trends and impact by banks and all that, to actually make the trend stronger, so that our whole pattern is actually strong as well. Okay, so this is your USD JPY 1 hour chart, giving you a potential opportunity of an ABCD or a bearish pattern, but at the moment, not just yet. On the it has already gone past 112.90, so it has probably triggered some entry point already, and it's looking into the downside to target or aim the 110.60 area. Okay, so this is your trading area here. Okay, so let's just look into, and that's quite a significant trading area. Now, the thing about the centroid area as well, it is a really a very important area, because as we draw automatically, that centroid automatically also gives you the hint of how strong it is a significant support resistance. Okay, so as you can see on this yellow line itself, look at how it has been respected right there. I'll probably change the color to red, just so that it marks very important areas. Okay, so here, as you can see, if I go into my 4 hour chart itself, you can see how prices have respected that centroid area, that center point. Okay, and you can see we've got another big rise or bullish momentum there. It was a very strong support there, very strong support there as well. You've also got more there, some resistance and so on. So as we go and go back and look at prices even far back, you can see we've got more evidence of how much prices have respected that centroid area. So that's why it's highly essential. So this is quite a good style to of trade or technique that would take into account all the important areas, especially resistance, support, resistance. Okay, 112.90 it is. So that's basically it. 112.91, if you're looking at the downside, it should be 112.70 instead of 90 here. Okay, so I will change that here to 70 instead, not really 90. Okay, because 80 is it, because here it's given the center point at 112.91 or 92. Okay, so below that is 80, below 80 is 70. 80 is your psychological number. Okay, so it should be trading area 112.70 onwards. So it has not reached that good price to trade as yet, because it is at 112.75 now. It's probably best for us to wait until 112.70, targeting 110.60. Okay, so this is just a bit of a tweak adjustment of the price right there based on the centroid area. So you can still look at how much price have what do you call that, respected that area right there, as you can see there. Okay, so here you go. That's basically it. Give a brief, what do you call that, introduction to geometric trading right there, giving you what's happening with prices as well. I mean, here itself, I know it looks really complicated here, but let's say we simplify it by looking at Euro USD, let's say your analysis is giving you hints that the trend is on the downside. Okay, so you've got, let's say, a move downwards that could be your A to B leg, and then now it's correcting itself. So now it's too early for that to be the C right here. Why? Because you need the C to the D to come down a little bit more to confirm that that C point is strong, at least a few candles first coming down, and only then you start drawing A to B, B to C, and C to D. That is a bit too early for us to draw a B, C, D pattern at this moment of time. Okay, so just to give you a bit of an idea. Now here itself, perhaps this one here a little bit better on the GBP JPY, just an example for you. If I do that here and I make that bigger, you got A to B going downwards, and brilliant, nice C touch there. It has already gone down quite a lot, so that is quite a potential for an A, B, C, D. Why? Because you can easily then have an A to B right there, double click C to D right there. Okay, so then we have A to B there, and then B to C there. Okay, so it is still giving us a little bit of room, saying that it might actually go to that 139.73 area. The problem with that is that 139.73 to the upside is very close to 139.80 psychological level. So before reaching 80, it's probably best for the exit to happen, or exiting your trade. Okay, for the entry area, centroid area, attaching this area from A to D, you get the center point area right there. That would give you 142.25 and below to look into trading area, targeting 139.73 and above, or 139.80 and above. So that's your trading area. Okay, that's just an example. Once you have a better picture, or clearer picture of the trend, you're able to look into that much better. So here on a daily chart, for example, of the gold, we're looking at gold here. We're looking at a potential ABCD as well. Okay, so that's giving a signal to come down more. So you could see right here, for example, you've got A, B. If I take all that away, all these lines, okay, take this line, that line away, right, and that one as well. Okay. All right, and the last blue one there, you can then see that there is a potential C to D to the downside. So this is based on the daily chart for the gold. So again, we started off with an A to B, okay, completed, B to C completed, and then C to D just on its way down. So at this stage, we've got an A, B, C, D, for example. I'll just take all that away, okay, just so it's clearer for you guys. All right, so you've got a simple ABCD here potentially for gold on the daily chart, and then we're looking at a potential fall to the D point at 1031.09. But the thing is that the question to ask is, do you actually participate in this trade at this moment of time? The answer to that is no. Why? Because you need to look into the centroid area by converting the ABCD pattern into a geometric pattern right there, and then you need to line up that center point area, which is indicated at 1169.89. So 0.89 is very close to the 80 side number. You need to trade below the 0.80 area to reach a high probability, lower risk area to trade to the downside. So it's very likely for it to come under this line and then to look into selling opportunity only under that centroid area, because if not, you would have the risk of selling now and then get being caught out in the market or stopped out because it might just bounce at this area here. So let's look at the nature of the centroid area first. As you can see, this centroid area here He's got significant resistance here, support here, another very strong support here, some more support and all that. So that's why it's quite risky at this stage, because what could potentially happen is you would be planning your sell, and then you've got the centroid area here, and what could happen potentially is prices coming down here, finding that to be a strong support, and then boom, upwards. So then that pattern wouldn't be valid anymore. If it happens, then you've got another pattern that may be an ABCD to the upside, maybe something like that. Okay, so this is basically what happens with patterns as well, that one pattern could turn into another pattern, like a bearish may turn into a bullish, vice versa, depending on the trend, depending on the domineering or dominating trend as well. Okay, so ABCD here, but nothing would happen to your trade if you have put a pending order, let's say, under this line here. So a pending order would fit very well with this kind of trading methodology, the geometric pattern style. So just a brief summary of the geometric patterns methodology is that it's applicable to any time frame. Okay, short, medium, 5 minutes, any time frame. It's also applicable to any instruments, almost any instruments. There are no instruments so far that I have not tested on, but if they are, then I'm not sure whether it worked, but it worked more than 90+% of the instruments. So I started off with stocks, oil and all that before I got into Forex with the geometric patterns. So now it has been tweaked to the geometric patterns, and it's looking like it works really well with geometric patterns on currencies. So it's equally effective and working quite well on equities, stocks, commodities, oil, silver, gold, and everything else. Okay, so this is basically it, my take on the market, but most importantly, my sharing with you on the introduction or the basics of geometric patterns and how is it applied. Okay, on to your Forex trading. So that's basically it, guys. I would like to open the session to questions. If you guys have got any questions, please feel free to ask. If you've got any, pairs that you would like me to discuss, or anything about the geometric patterns itself that you would wish to ask. So feel free. Any questions at all, guys, before we end the session? Because definitely time flies really fast. So we would, be welcoming more questions. Any questions at all? No questions from you guys? Is it clear for you guys on the patterns, on the ABCD? How do you spot the pattern? How do you draw the pattern? Any questions on that at all? Any complications or anything that you're not sure about? Anything at all? Not at all. This session will be recorded. I would then request, if you've got requests, of course, you could ask the person who introduced you to this pattern, to this session, and also your account manager. So feel free to do that as well. Okay. All right. Okay, difficulties will start, as Marina mentioned, when we will try yourselves. Yes, it's always good at the beginning to look for difficulties, when you're analyzing the market. It's the best way to learn, as opposed to, make the mistakes as many as you can, I would say, now, on your demo account, on your practice account, and come to our sessions more, and my live trading on Mondays and Thursdays, and you'll be able to see it applied on the live market, and you can practice as well. And that would only be better, meaning practice always makes perfect. It is the best thing to do. How do we analyze? Muhammad Khalik has got a question. How do we analyze the coming price? The coming price meaning the prediction of the D point here. So basically, you are not trading A to B, B to C. You're like here in gold, for example. We're looking at gold. We are predicting where the price potentially could go to, right? So we are forecasting price could go down to the D point right there. That's how we are forecasting it. So we are looking at A to happen, B to happen, B to C, correcting downwards, and then we draw this pattern so that we can then say potentially or probably price can fall to the D point area. But in my opinion, it's probably best for us to only start trading if it goes under this area here, because this is your centroid area. your centroid borderline. So it's not like saying, okay, it's got a potential to go down and then you just start selling now. No, it's not really a high probability, low risk type trading strategy in that sense. So hence we want to wait. We want to look at your, of course, your equity versus the time frame that you're looking at as well. So here, because you have got an ABCD on a daily chart, you can always go onto lower time frame and look for whether or not you've got an ABCD to the downside as well. Okay, so here, if I go on lower time frame, like the 5 minutes, let's say, and I know I've got an idea that the goal, let's say, for example, I've got a downward momentum or bearishness. Okay, so bearishness or downtrend, then you look for ABCD to the downside or bearish ABCDs only. Okay, so here, for example, we want to look for a downside. Here you've got an A, let's say B, C, D to the upside, but then that upside move or bullish ABCD does not match totally that trend overall for gold, unless you look into 5 minutes, 15 minutes, it's giving you upward, then 30 minutes as well, giving you upwards, let's say, then okay, you are able to look into an ABCD to the upside. But this is your short-term type trade to the upside based on choosing 5 minutes, 15 minutes, and 30 minutes. Okay, these three time frames should actually be matching. Okay. How about today? Big news, crazy market, we lost today, bearish. Okay, now this is it. Muhammad Khalik, I'm not sure whether you have actually attended our first session today. The first session, for example, we have shared with you this ABCD. So far, it has actually worked quite well even during news time. But again, you've got trading area that you need to be very careful whether to enter the trade at that price. So we use a lot of price action. Okay, so what we have done today is we predicted the C to D move to the upside. So this was our prediction at that time today, earlier this morning at 11:30ish plus my time. So it's about 1:30 in the afternoon your time. Almost, and the price was actually around this area here. Okay, so we had C to D, basically predicting C to D, right? And we did say that the D would actually reach around that area, but not to take profit straight away at this anyway inside here. The reason is because 11350, because it would actually be reaching 11350 area, right? So as you can see, you've got this spike all the way up there, right? And it came down all the way. Now, as it came down, we've traded the C to D, okay, because we've also done these A to D and look for the centroid. So we started trading at 112.90 to the upside, okay, and we exited at 113.40 because we didn't take anything there. We want it to be lower than the 113.50 area, which is 113.40. So in that sense, we traded the upside move at that one there, and we benefited for some pips to the upside before the market actually dropped. So we didn't actually, I didn't really participate in the downward move, but some traders did. So they traded from D to E to the downside and targeted about 50% Fibonacci level. So we use the Fibonacci level as well to guide us on certain areas that we can actually trade or take full advantage of it. Okay. So that's basically it. It did benefit us on applying this technique based on USD JPY earlier today on the 30 minutes chart. So we are trading really carefully, looking at the risk levels. So that sort of helped us to cut the risk out and not be into the risk. So that did give us some pips there very nicely, especially for the C to D leg. Okay. All right, Mr. Mohammed Khalik, I hope that has been clear for you. All right. At this stage, we're just looking at patterns, perhaps to the downside, like A, B, C, D to the downside, let's say. But this is what I see at the moment on the 4-hour chart on the USD JPY. You've got more room to the downside, and this is the area I would say for the PRZ potential reversal zone or a take profit area, because I've got an advanced pattern called the Z-like pattern, and I'm looking at a prediction to the downside, projection to the downside here from this C here to the D. This is not an ABCD pattern, but still you've got an A here, B here, C to D. And again, I'm trading only at C to D leg. Okay, there are rules on where the ideal entry points are and things like that. But here, what we do is that I just want to demonstrate this to the people who are, beginning to understand the ABCD pattern, is that at the CD leg here, we just have got many potential ABCD to the downside. So now, for example, for geometric pattern traders, we're looking into downside move, because as you can see, a red dotted line giving us so many potential ABCDs to the downside, and all these patterns are pointing to the same level, same area as that C to D move of my Z pattern earlier on. So even though we've got one pattern, inside that pattern, we're able to look for many ABCDs and take advantage of that ABCDs. And you just draw the A to D to find central and things like that. Okay, let's look at questions. Most welcome, Mr. Mohammed Khalik. Okay, any questions at all, you can always contact, you can contact Marina, you can also contact your account manager, and feel free to ask them questions, and they can always communicate with me, and we'll be able to guide you further on any questions that you may have. Okay, all right, so that's basically it. Thank you, Marina. Okay, thank you too. So there you go. This is basically it. We just to summarize, we do have lots of ABCD, a lot of trading opportunities to the downside, especially for USD JPY. We're looking at the 4-hour chart. We can see, as you can see as well, we've got lots of ABCDs here aiming downwards, downward pressure. But now you've got the price at 112.66. So be careful. As it goes down, it's very close to the 112.50 area. So 112.50, 112, yeah, 0.50 is your potential reversal or support area. So if it comes down, let's say price coming down, it might actually reverse very close to the 112.50 area and then find correction and go up again. So make sure if you are trading to the downside, let's say you want to escape before it reaches 112.50. So you want to take profit and all that at 112.60 at least. Okay, and quickly get out and then trade again as it comes lower than 112.50, like 112.40, let's say. Then you can trade again for a sell, and then you look into the next lines that you can actually see here. Okay, so that's basically it. We've got opportunities to the downside. This is based on the 4-hour chart, of course. You can always go on to, based on your equity level, you can always go on to lower time frame for smaller equities and look into ABCD again. Okay, because the trend at this moment of time is favoring to the downside, mainly because prices are under all the 3 moving averages. That is signaling downward tight momentum for this moment of time. Okay, but very quickly, what we actually see potentially is that this Z pattern is signaling to us that yes, it can actually go down, but it will find support and then boom, goes up at this zone here. This is based on the 4-hour chart. Okay, so for now, still to the downside opportunity, but very shortly, once it reaches to this one here, I might bounce up because this is a Z pattern here. Z pattern, this is a bullish Z pattern, which goes like this. When it reach here, it's signaling upward move. Okay, guys, I hope that has been interesting for you, informative, as well as practical for you onto your live trades, especially. And I would like to thank you guys for attending today's session. We've got more coming up. Next week, join me live. I'll be sharing it. You can also contact Marina. We'll have the links as well as your account manager to distribute the link on Monday for my live geometric patterns on Mondays and Thursdays. So you can actually join me with my on my live sessions on my trade ideas that I have spotted, and I will be sharing with you on all that and answer your questions as well on the live market with some trade signals, geometric ones. Okay, all right, no more questions, guys, any more, or we could actually wrap up here today. What's your opinion? Any questions at all, guys? Anything at all? All clear, I hope. Okay, I see no questions so far. I think we're going ahead with more trading. Okay, brilliant. All right, that's best. Fantastic. So I would like to wish you guys a very good evening. Thank you very much for attending my session today, and I'll see you guys again very soon. So next week, do join me in my live webinars on Mondays and Thursdays, and we shall chat about all the trades, trade ideas, geometric patterns, and everything else. Okay, guys. Thank you once more. Bye bye.